Are you aware of the upcoming 31st of July tax payment deadline? Do you know what it is all about, or do you just follow what your accountant has told you and make the payment? If your tax and Class 4 national insurance liability on your personal tax return is more than £1,000, you will need to pay the tax in 2 instalments on 31st of January and 31st of July each year. Here's a little video explaining how it works, what you need to pay and when. In this video, we're going to assume that the 2020-21 tax year was the first year that you were required to make payments on account. If you have already been making payments on account from previous tax years, you can skip to the next bit on the 21-22 tax year. So going over to year one, so we've not made payments on account previously. We've got a tax liability of £6,000 that needs to be paid on the 31st of January 2022, although there is an additional £3,000 being the first payment on account for the next tax year. And that is 50% of this tax year's liability to pay together with the tax liability on 31st of January 2022. Later that year, on the 31st of July 2022, you need to make a second payment on account of £3,000. Going over to the next year, the payments on account structure set by HMRC assumes that the tax liability for the next year is going to be exactly the same as it was in the previous year. Now, that is very rarely the case, and it is likely, therefore, that you're going to have one of two scenarios. You either have a tax liability in the next year that is higher than the previous year, or one that is lower. So firstly, we're going to assume that the tax liability in the next year is higher in scenario A. So you've got a tax liability of £8,000. You've already made payments on account in January and July of £6,000, being £3,000 in January, £3,000 in July. Therefore, there is a balancing payment for this tax year of £2,000 that needs to be paid. Plus, you've got the first payment on account for the next tax year to pay of £4,000, being the total payable on the 31st of January 2023 of £6,000. Coming up to the 31st of July later that year, you need to make a second payment on account of £4,000, meaning that when it comes to the 22-23 tax year, you've paid £8,000 towards your tax liability. Now, over to scenario B, where your tax liability in year 2 is lower than it was in year 1. You've got a tax liability here of £5,000. You've already made payments on account, as we've just explained, of £6,000, meaning you're due a repayment of £1,000. Although you now need to make the first payment on account for the next tax year, being 50% of that £5,000, £2,500. Let's deduct the £1,000 repayment due to yourself, meaning the amount payable on 31st of January 2023 is only £1,500. Moving over to later that year, 31st of July 2023, you need to make the second payment on account of £2,500. That together, the two payments in account means that when you come to your 22-23 tax year, you would have already paid £5,000 towards that tax liability. Now, if you're in a situation where you know that your tax liability for year 2 is going to be lower than it was in year 1, and you don't want to be out of pocket by having to make a payment on account, which is going to see you overpaying your tax for that year, you could file your tax return early before the 31st of July and make a reduced payment on account for that. Thanks for watching. Please let me know your thoughts in the comment section below.